All right, what is going on, guys? Today I made $44,000 day trading NASDAQ. This is very typical in terms of last year's trading, but this year's trading, this is low-key the most that I made all year in a single trading day. So feeling super blessed. I did over leverage a little bit based on my current risk management plan that I've been trading this year. Most of the time I'm risking anywhere from $4,000 to $5,000 per trade and taking profits based on that. But today I low-key accidentally risked $12,000 on this trade. Regardless, we still hit take profit. As you can see, we entered right here on this buy and we top ticked the fuck out of this. And I could have still held runners for this trade, but I just decided not to because of how heavily risked on I was within this trade. But that's besides the point. Let's jump into how I did this in the first place. Okay, so today the trade that we took was on NASDAQ. Okay, coming in on the 4-hour time frame, there was really no high time frame draws on liquidity that I wanted to outline, and no high time frame imbalances that I wanted to outline on NASDAQ. What we did have though was some hourly draws on liquidity and no hourly imbalances. So we have these hourly lows right here, these hourly lows right here, and then I also marked out these hourly lows because market opened and then had this big abrupt move to the downside right after everything. So I didn't really expect that was going to happen, but can't really assume what the market's going to do on a daily basis. But anyways, we can see that right when market opens, we don't take out buy side liquidity, which is up here, and we don't take out buy side liquidity, which is right here. We end up coming down, we take out two forms of sell side liquidity, these hourly lows right here, and then also these hourly lows right here. From there, when we see those hourly lows get taken out, what am I going to be looking for? I'm going to be looking for a 5-minute retrace. We get this 5-minute retrace right here. We get a move up and then a move down, 5-minute retrace. From there, I scale down into the 1-minute time frame. Okay, and then what am I looking for? I'm looking for a break of structure and then a continuation confluence. We get a break of structure right here. We see a leg down. You're probably saying, oh, where's the continuation confluence? Just a plain and simple equilibrium getting hit. We see buy orders coming out of that with this candlestick, entered off that, stops underneath where the trade gets invalidated, which is underneath these lows because the trade was taken off of equilibrium. And then where did I go ahead and target? I targeted these highs right here for a 3.74 risk to reward ratio. Lately, I've been catching some really good risk to reward ratio trades and my win rate has been banging. So everybody loved to say, oh, his win rate's good, but his risk to reward is shit. Now my win rate's really good and my risk to reward is really fucking good. So now what the fuck are they going to say? Price ended up coming up. We took out these hourly highs. I ended up taking out full profit. I definitely could have been much more opened if I had used my regular and more typical risk management to hold up to these hourly highs. I honestly would have liked to do that for a 1 to 6.58 risk to reward ratio. But because I was so heavily risk on and because I had already made so much freaking money once we got to these hourly highs, I was like, get me out of this trade. So boom, that covers the trade that we took on NASDAQ. We can go ahead and cover ES now and how I would have went about trading ES. Similar situation here. We had these 4-hour highs. That was really the main confluence and draw on liquidity that I saw on the 4-hour time frame. Moving down into the hourly time frame, we had a couple draws on liquidity. We had these hourly lows right here, these hourly lows right here, and then also these hourly lows right here. And then in terms of higher time frame draws, we had these hourly highs that got made once this down candle got formed from market open. We had these hourly highs and then these hourly highs. And as we can see, we're going through and hitting these potential and possible take profits if you guys ended up taking this trade on ES. So coming into this, market opens. We don't take out any buy side, so that's still open for the taking. Market comes down. We sweep out sell side liquidity. We sweep out these hourly lows, and then these high time frame. These high time frame hourly lows, and then this was actually the start of an hourly imbalance that I had marked out. Right here, we can see that this is imbalance price action, and this is the start of the imbalance. So instead of just bringing that huge ass rectangle on over, I just decided to do the line. And then from there, what do? We scale down into the 5-minute time frame. Okay, we got a 5-minute retrace. I already took my trade on NASDAQ after this move up, but I really wanted to see this imbalance get filled. We didn't get it. We didn't get equilibrium filled on the 5 minute. NASDAQ obviously offered a better trade entry, but we did technically get that 5 minute retrace, so we can go and show like how we would have gone about entering. This still served a pretty good entry. We get that 1 minute break of structure right here after the 5 minute retrace, and then from there we get a fair value gap that gets filled, and then bullish candles showing that orders have been filled. We very well could have just gone long off of that. Stops underneath the candle that formed the fair value gap. First take profit, not the best, 1 to 3 risk to reward ratio. Second take profit, a lot better, 1 to 1.89, and then last take profit is a 1 to 2.19 risk to reward ratio. So overall, like, you still could have taken this trade and made a bunch of money using my strategy. And then also this NASDAQ trade, you very well could have taken this trade and made a bunch of money. It just depends what index you wanted to take it on, because there was 2 really obvious, really simple, really easy trades to take. And if you guys are thinking like, oh, well, how do I learn this strategy, or where can I figure it out? Okay, I have literally so many free videos on how to learn how I trade and how I teach my strategy and how I teach all these confluences. So if you guys are new here, welcome to the freaking channel. Watch my boot camp, watch the trading transformation. And if you guys want to learn from me directly and go through like a full month-long, okay, course, all right, which isn't necessarily a freaking course. It's me live teaching you every single day for a month. The mastermind is now open. There's going to be a little link in the description if you guys want to check that out. So that being said, that covers the trade recap for the day. Really fucking good trading day. I was pretty freaking excited about hitting that really awesome trading day. Brought me back to last year's types of trades. Everybody was like, hey, how come you're not making as much money as you were last year? And I was saying, because I'm super risk on in crypto right now, and I see the markets as a whole as just like a whole risk. Okay, so if I'm super risk on in crypto, I'm going to risk a little bit less on trading so that I'm not, putting all my eggs into one basket within the markets. Okay, but today was one of those days where I made a bunch of money, and we're currently up 50K on the week, which, man, it feels good. It brings me back to the roots to be trading with capital like this, and maybe we keep this up. But yeah, with that being said, I love and appreciate you boys. I'll see you guys tomorrow on the Kick stream, where I live trade every single morning at 9 a.m. Eastern time. Peace out.